On today's show, Directors and Officers Liability Insurance and how it can impact your practice. Part 4 of this week's series on business asset protection with author and attorney Ike Devji. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author and a backroom technician. Let's get down to business. Well, welcome to day 4. I'm getting my eyes opened, Ike. Everybody, after yesterday's show, every financial advisor that watched that show is out there trying to get their coverage for their data breaches.
We can only hope.
We can only hope. And I say that's also a really great, the money you invest for the breach will be great because it'll be good, fodder for sales. You're going to probably say, get in front of other potential clients saying, this is what I have. But today we're talking about a specific one. And I have to tell you, the first time I read some of your information on this, I was paralyzed because I think of directors, officers of high-end C-Corp monster firms, not I'm sitting in church and I volunteered to be on the board of directors and the exposure that could have to me. I mean, I'm looking at this extreme and it could be all the way down to this.
You are absolutely correct. It covers a wide range of people and issues. Many of the people who we advise to get D&O insurance or to check and see if it exists for their service are often surprised at the answer that they get. And it is something that I think is part of the core business asset protection and insurance planning that every business needs. And there's a great example out there, and this is an extreme example on the high end. America's football sweetheart, Jim McMahon, is unfortunately involved in some litigation where he was on the board of a bank. And that bank is being sued, including, well, the members of the board of that bank are being sued for $120 million in bad loans issued by that bank. There are 17 board members on that bank, and they're being held jointly and severally liable. Poor old Jim's getting to go along for the ride. Now, why do we put retired NFL players on the board of a bank?
Well, it's huge PR.
It's huge PR, right? It's because middle-aged guys get excited about sitting next to him at lunch and hearing the war stories. And he is a personality that is bait. He attracts the right people. Do you think that Mr. McMahon personally reviewed those loan applications and financial statements?
No.
I'm guessing, yeah, and again, I'm absolutely guessing, but I'm fairly certain he did not. And that exposure is there for him. And unfortunately, what's going to happen in a situation like that is the guys with the deepest pockets are the ones that are going to get chased the hardest, right? There might be somebody on that board who has substantially lower net worth than Mr. McMahon, and they're all going to be held jointly and severally liable for the entire award. Now, that's the high-end example. Or another high-end example would, of course, include somebody like a CEO of a public or publicly traded corporation, or even a privately held corporation that's a big company. We get that that person and his executives and their board of directors or her executives and board of directors would certainly want and need that coverage in place. But what about our business owner, for instance, that is part of a small partnership, maybe a group of 6 doctors, and he's the president of that medical group? Or how about your neighbor who is a volunteer on a school board, right? Or volunteers on one of the high-profile charities we have here in the Valley, right? And they serve on that board, and that board is responsible for raising, accounting for, and distributing, in some cases, very large amounts of money that never actually touch our client. But that person still has legal responsibility. And we have seen, unfortunately, over the last few years, lawsuits in public corporations, in privately held ones. We've seen things happen where we have partners and board members who get into conflict with each other. It's not unheard of that business partners sometimes have to have a divorce. And we've also seen it something as simple as service on the board of a church or a synagogue or a school, where if you spent the Sunday school money on the parking lot repairs and that's not what the bylaws said you could do, well, somebody is going to take issue with that and hold you responsible. So it goes from high to low, but it's universally overlooked, and most business owners don't understand that they are, whether they have that title on their business card or not, they are the executive, the CEO, who's in charge of making vital legal decisions and who are in charge and responsible for compliance on lots of different issues. Could be employment practices, could be accounting practices, could be any number of things, and that coverage is not part of their general liability that we discussed on our previous shows this week, or nor is it part of their professional malpractice or professional E&O type coverage.
So this is really a separate standalone liability issue. I mean, because you're saying anybody on a director, I mean, I kind of get the corporate side of this equation, but when you introduced nonprofit charities, religious organizations, you know, people are just trying to do the church a favor by participating, and they may have exposure like this, and especially somebody that has money to lose.
That's the key.
That is a huge issue. And to me, this is another perfect issue for advisors to introduce into the mix. I want to bring this up to you. I'm sure we have many clients that are sitting on boards, on non-charitable boards, sitting on other kind of volunteer boards that really they love and everything else, but they don't understand, hey, they could have some exposure here.
You're absolutely correct. And one of the things that when I do a rundown or an analysis with a client that I'm talking to about their personal asset protection planning, I ask, do you serve on the board of any kind of public corporation or business? Yes or no? Do you serve on any foundation, church, school, university, scientific research organizations, museums? I mean, think about the list is pages long of all the types of board memberships. This is part of what I ask. If they say yes, then I say, here is a form letter that I want you to send to that organization and say, look, I love your service. I appreciate that you do that. Here's a letter that we need them to answer in writing. Number one, is there insurance that covers my service on this organization? That's the first question. Number two, I need a copy of the in-force policy, because we have also found that there are cases where people said they were told, oh yeah, of course we have that. We have, you know, a guy who looks at all of this stuff and it's covered, and of course we have it. And then something happens and we find out that the policy was never amended to include that specific individual, or had limits that were too low, or had expired and not been renewed. So if you are relying on somebody else, at least get a copy of the paper.
Well, I want to continue this discussion. We're going to do so right after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, we're talking about directors and officers liability, and again, I was parking my head in corporate America, and now I'm kind of concerned that we're participating in volunteerism, charitable organizations. A lot of people are doing it out of the benevolency of their heart. They don't understand the exposure to their own finances. How expensive is this, though? I mean, is this pretty economic? It's based, I know it has to be based on prior claims. There's a little history, the amount we're trying to cover. But give me a little idea of what we're looking at.
Sure, Steve. It's a great question. It's an important question because that's the first question that we're asked as advisors is, well, how much does it cost? I will tell you that, as you said, and like every other form of insurance, it is underwriting specific, and that underwriting addresses some key issues, which is the average size of the award, the past exposure and claims history the organization has had, the level of compliance planning that the organization has in place. All of those things are going to be factors. So it's hard for us to give a wide audience of people who out there who are watching us at home. It's very difficult for us to give you a specific dollar amount that would be anywhere close to what you might actually pay. But I'll tell you this, in my experience, the cost of this for most private business owners that we might be talking to as one example, or a small foundation, is typically less than the cost of a 3-hour consult with a defense attorney at a qualified firm. The first time you have to go and address this and pay a lawyer to defend you by yourself. I'm telling you that the first couple of hours that you will spend there would have paid for the whole policy in most cases.
So really, when we're introducing these, I'm so sorry, I think I've fallen into my own trap. I was going to call it ancillary insurance protection. It sounds like these are commodities that we really need to have these introduced not only into our practice, as advisors. So look, I'm looking at D&L on that, on my own practice, my data breach insurance on my own practice, and then I'm using that as my strategy to come back out into the business market and saying, the odds of you having this is really remote, and here is the exposure. And if I'm sitting there looking at 3 hours of attorney billable hours versus I could have paid the same thing for a policy, why am I not doing that on my first, as you said, first consult, it's about the same money.
Exactly, exactly. And that would have covered not only that first consult, the ongoing costs of the defense, and depending on how your policies was structured, maybe even some kind of substantive award. Remember that litigation defense, even if you're right or even if you're innocent, is a financially fatal exposure to many small business owner clients that we deal with. The cost of defending a lawsuit can easily be $100,000 or a multiple of that, and can go on for years. So not only is the client that you and I are protecting exposed to the stress of the litigation, she's exposed to the cost of the litigation, she's exposed to the potential result of the litigation, and at the same time she's supposed to still keep running her business and keep her eye on the ball. Where if we had had this coverage in place, we could have delegated that cost to an insurance company and offset the exposure to the client no matter what the result is. So it's a big deal, and it needs to be part of any comprehensive insurance planning as much as the general liability policy and the umbrella and everything else.
So, yeah, but we're adding now to it now, and I don't want to use the word ancillary ever again. We're adding malpractice. We're the employee protection. We're adding the data breach issue. We're talking about directors and officers liability. These are not really that expensive to cover issues. Do they cover, by the way, you said the defense, even if you're right, do some of these contracts actually and policies cover your actual defense bill for your own attorney?
Yes, that's the core thing that I'm looking for is we want to make sure that the client has, I don't want to say unlimited, but as close to unlimited resources in defending themselves against the potential award as possible. And what we don't ever want to see is a client put in harm's way because they couldn't afford enough lawyer or the best lawyer or any lawyer, and they are trying to fund this out of pocket at $500 to $1,000 an hour in some markets if you need the best kind of litigation help, and that varies in what part of the country that you're in, but in a place like New York, you could easily spend that. You know, and in other major markets in this country, I know lots of litigation attorneys right here in where we are that charge $400 or $500 an hour. So that expense is a significant one.
And that's included in these contracts.
That is the main thing that I'm worried about, is being able to adequately defend yourself and have that cost covered by the insurance policy. And then if we're lucky and have bought the right kind of policy and are working with an experienced agent, if we lose and there's an award, in some cases we're going to have some coverage there as well.
Well, that's our show for today. Remember, before moving forward with any of the ideas you hear on our show, always consult your tax advisor, your legal counsel, or your broker-dealer compliance officer. And don't forget, you can view all our past episodes at downtobusiness.ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. We'll see you.